Jim, so the bounce continues here. At what point does this start to drag investors back in?
Well, I think that just at the top again of this move, I think this caught a lot of people by surprise because if you go back and rewind the tape to 8 sessions ago, you thought that Omicron was basically going to spread the same way that Delta did. And Delta really did set back our economy. So far, that's not been the case. Instead, what's happened is that the overreaction was so severe, both in oil and common stocks, that you have this moment where people realize, wow, we got really oversold. What can I get in? Did I miss the dip? David, I want to really kind of call out Apple as a classic here. Right. Apple got hit by Omicron and also got hit by that incredible story about how the suppliers were calling Tim Cook and saying, listen, what's going on? And then suppliers calling Bloomberg.
Yeah,
that did not happen.
You were outspoken last week in combating that story, or at least questioning the validity and or veracity.
Well, as Carl knows, I don't like supplier stories. Suppliers, if you remember, it's like Fight Club. The first rule of supplying to Apple is you can't talk about supplying to Apple.
Right, you made that point. And also, just
look at this stuff.
Very hard to gauge. And in part, you pointed out, they could be ordering more than is typical because of the current situation. So it's very hard to know really what it means. And, of course, now we see Apple has, it's moved up strongly since then. Right. This morning you got Katie Huberty coming out with a new price target at Morgan Stanley, right?
Talking about the service revenue stream, the way I like to view it as. Remember, David often talks about how, Carl, the two multiples that I focus on. There's the Procter & Gamble price earnings multiple, and there's the Apple. And once again, Apple went below Procter & Gamble's price to earnings multiple. And then you get this, and one of the things that Katie's talking about is this service revenue stream, which is $70 billion. And then when you hear AR, VR, that's going to be conflated with metaverse. And I am proud of Tony Sacconaghi, well, his team, doing a piece on Bernstein saying that maybe we're at the peak of metaverse love.
But what are they talking about there? What is Katie Huberty talking about, AR, VR? What is the opportunity then that she's outlining in this?
Well, I mean, I think it's
not upgrade, but raising.
To me, when you look at, I think Katie's fabulous, but it was difficult to kind of do anything other than say that it's worth $29 billion in 2026.
Right.
I mean, it's kind of like everyone's talking 2026 now. I wish I could do that.
She also talked about autonomous vehicles, actually.
Well, he's saying
AR and VR
saying it's not getting any love because even though it might have a car.
Valuation would need to reflect the optionality of these future opportunities. Is part of her thesis again this morning of raising that price target to $200.
Apple TV. I mean, I think that Apple TV is now a staple. I mean, Carl, Apple TV was something that I thought was an afterthought, and now I find, what's on Apple TV? It's up there in the conversation with Netflix.
They're spending a lot more money.
The shows are pretty good.
Yeah.
$200 is a street high, right?
Yes, and
street high.
By the way, I mean this is being done after 3 days of where we started talking about Apple as literally the blue chip, and she even uses the safety choice. I find that people got short this thing very big.
And it's been an interesting end-of-year move for the stock because throughout the year it was underperforming the S&P.
Right, and you talked about that a lot.
Sometimes dramatically. I mean, half of its performance. Oftentimes we had the S&P up, let's call it 20%, and Apple up only 10%. But over this last, let's call it month, and you can see it there, Apple now outperforms the S&P, Jim. That is interesting, given obviously they are linked. Given how important Apple's weighting is as a $2.7 trillion company, and of course it is a market cap weighted index.
But she does a lot of stuff like the AR VR standalone is worth X, the Apple car is worth Y, and look, it doesn't really matter. What matters is that the company she thinks she's found a way to get to 200. It's interesting because we're going to speak to Pat Gelsinger later in the show, and he's actually saying, okay, look, I've got this asset. It's worth much more. And, Carl, I know when you think about Intel, they actually need the money. So this was actually a good idea.
Yeah.
When I look at Apple, whenever I see, like, if you break it up to this or if you PT it, well, it's not. I mean, I just think you have to just say that if they are able to do something with VR, anything with virtual reality, then suddenly you have an NVIDIA situation, which was able to tack on $600 billion in valuation.
The gift that keeps on giving.
Yeah. NVIDIA and AMD were down yesterday, and I kept thinking, okay, I try to get in the minds of the sellers. This is apropos of my conference call on Thursday. And like, are the sellers acting out of fear? Are they trying to are they painting the tape, making stocks look soggy? Or are they just saying, you know what, it's time to get out of high growth into, and then they don't really tell, I mean, I don't know.
Well,
what?
Shepard Smith here. Thanks for watching CNBC on YouTube.